Good morning and welcome to Stock Market Today for Wednesday, July 17th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email to follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market open. So U.S. equities were mostly lower on Tuesday's trading, S&P 500 breaking a 5-day winning streak. Industrials, materials, and staples outperformed, while energy, tech, and utilities were the laggards to the downside. Treasuries were weaker across the curve. The dollar was stronger against the major crosses. Gold lost 20 basis points. WTI crude down over 3%, 3.3% on the day. So again, outperformers, industrials, materials, and staples. Energy, tech, utilities, and healthcare underperforms. Now, we got some economic data. Retail sales came in stronger than expected, and it's the latest economic report to surprise to the upside. Despite that, Chairman Powell reiterated the Fed will act as appropriate to sustain the expansion. Investors took that to further hammer home the point that we're going to get a rate cut at the end of this month. On the trade front, President Trump said that he could impose more tariffs on China, who came back and reiterated that they are not in a rush to make a deal. As we get to the desk this morning, S&P futures are up 10 basis points after finishing mostly lower yesterday. Asian markets were lower overnight, and European markets are mixed here this morning. Treasuries are stronger across the curve. The dollar is unchanged on the major crosses. Gold down 60 basis points, and WTI crude getting a little bit back, up 50 basis points on the day. Here's your S&P 500. Ends a 5-day winning streak. We do have support in the 2,900 to 2,950 zone. That has not changed. We're going to call resistance right around this 3,000 mark where we're trading currently. Round number resistance, maybe doing a little bit of a dance around that line. What we're looking for, should the market start to pull back, is for the RSI to hold bullish ranges. What does that mean? That means similar to what we saw during the advance to start the year. Notice how the RSI never even really went below 50. As the market pulled back. That's a sign of bullish momentum. That's a bullish momentum confirmation from this indicator, and it gives you a sense that the uptrend is strong. So that's what we'd be looking for. Should the market pull back and start to think about testing these support levels, we want to see the RSI hold ideally above 50, but above 40 would suffice to keep it in a bullish range. So that's what we're looking for from that particular momentum indicator. On the flip side, Chaikin money flow is bullish. Couple series of strong closes late last week and early this week pushed the Chaikin money flow indicator into the green where it remains. So bullish momentum, bullish money flow. All that lines up from a trend perspective to say the odds favor a continuation of the trend higher. Does it mean we're going to go up in a straight line? Absolutely not. But the trend is likely to continue higher over time. What I will say is that sentiment's getting a little bit frothy. And based on our work, our overbought, oversold indicators are all overbought for the major markets. So our market in a minute. What are we talking about in our note today to Chaikin Analytics clients? S&P 500 breaks a 5-day winning streak. We hit on a lot of this already. Powell continues to send the message of a July cut. President Trump reiterates that there's room for more tariffs. Looking at the oil and gas services group today, and it remains weak in a weak sector, right? Energy's been weak. This is a weak group within that sector. Futures do point to a slightly higher open here today. Power bars for the major indexes. Dow 6-4 bulls to bears, S&P 500 136 bulls, 58 bears. NASDAQ, despite a 50 basis point pullback yesterday, still remains 3-1 bulls to bears, 33 bullish or very bullish stocks for 11 bearish or very bearish stocks. Small caps actually outperformed on the day, 563 bulls, 318 bears. Bonds down ticked. According to the Chaikin Power Bar, large cap stocks and small cap stocks are bullish. That means when we look at each of these indexes, we look at the number of stocks in our model with bullish ratings, neutral ratings, and bearish ratings. The stronger the ratio, the more likely the existing trend is to continue. Now, our stock of the day is a little bit of a special situation, but we're going to use it for illustrative purposes. Remember, the stock of the day is auto-generated based on the algorithm. Cypress Semiconductor is being taken over. You can see the gap up here in the chart, right? So we're going to kind of ignore this. This all becomes irrelevant at this point. But what's interesting to me is that by following the process, there were opportunities to be in this stock in front of the takeover. Now, do you know a takeover is coming? Absolutely not. But it's a great example of how if you follow the process and stick to a discipline, you can really get, sometimes you can get lucky, right? Cypress Semiconductor back in May was a bullish stock outperforming the market. Bullish money flow became oversold. It actually triggered one of our buy signals, an oversold buy signal. So you kind of use this opportunity. If you were following the process of buying a leading stock in a leading industry group, when it became oversold with bullish money flow, you could have found a name like Cypress. And that's why I'm illustrating it here today. There's nothing to do now. Stock is being taken over. So the process is kind of thrown out the window in present day. But I just wanted to use it as a great example to show you some of the tools that we have here to increase of our odds and finding big winners or potentially big winners, right? Just simply following that process that we go through every day here. Bullish stock, leading, oversold with bullish money flow, triggers a buy signal, set up a great entry to be in a name right in front of a takeout. Sector tracker now, looking at the movement of the major sectors over the last 5 days. Industrials having some strength of late on the back of bullish responses to transport earnings. Discretionary continues to do well. Remember, we looked at discretionary yesterday, breaking out on an absolute and relative basis. Comm services, the relative trend there continues to improve. Remember last week I started talking about materials, said I was warming up, starting to play out a little bit here. Middle of the road, staples, tech, and financials. Energy remains an underperforming group. We're going to look at oil field services a little bit later in the show. Utilities, healthcare, and REITs at the bottom of the list. Remember yesterday we talked about our sector rotation, and we were starting to see some near-term weakness in the traditionally defensive areas of the market. Some of it has to do with the backup in rates. That's for REITs and utilities. Healthcare, we've been eyeballing this one now for a couple of weeks and highlighting the fact that the counter trend rally on a relative basis looks to have run its course, and the trend of underperformance looks to continue. Our industry in focus today, regional banking services. Over the past 6 months, this subsector has underperformed the S&P 500 by nearly 14%. However, its power bar ratio, which measures future potential, is very strong. 53 bullish or very bullish stocks, 13 bearish or very bearish stocks. It's currently ranked number 8 of 21 subsectors that we look at. It has moved down 3 slots over the past weeks. Now, some of the names that you may want to consider within this group, again, if following the process, or Bancorp Bank, TBBK, First Horizon, FHN, and OFG Bancorp, ticker OFG. Now, all of these stocks have very bullish Chaikin and power gauge ratings, but as we're going to see, many of them have been underperforming the market. Now, we've been talking about financials, and we're wondering if earnings is potentially a catalyst to get the market and model an agreement on the bank stocks to kind of join insurance within the financial sector to drive outperformance. And here's what we mean. Here's that regional bank ETF, KRE. It does have a neutral Chaikin power gauge ETF rating. But look what's happened. I mean, it's been an underperformer for the past 12 months, right? So despite the bullish fundamentals, the market and model have not been in agreement on the banks. And the same can be said for the bigger banks as well. What we look for, we don't just take the power gauge rating and say, wow, well, this is a bullish stock or this is a bullish ETF. I'm going to run out and buy it. There's still a process. We need the market and model to be in agreement. They're not there. Just not there. Actually, the intensity of underperformance has been picking up of late. So neutrally rated ETF, but underperforming, closer to overbought than oversold with bearish money flow. Just not a lot there to get me excited. Again, the fundamentals are there based on our 20-factor model, but investors aren't there yet. Relative strength is really important. So despite bullish fundamentals, we need the relative strength to be there. Taking a look at what's trending now, yesterday's S&P 500 gainers and losers. Again, remember we talked about the industrials and transport. We've seen good responses to earnings from Delta, good response from United. JBHT comes out yesterday with their earnings announcement, up 5.5%. Schwab's earnings sent that stock higher by more than 3%. I didn't see any news on Whirlpool to send that stock higher by 3.25%. Here's another transport. ALK, Alaska Airlines. Now, they did not report, but there were some positive previews in sell-side research to send that stock higher by 3.25%. And Semantic catches a little bit of a rebound, up 3.2%, as now it seems the Avago deal is not completely dead. That's become a special situation as far as I'm concerned. The event risk in that stock has been elevated. I kind of tend to leave that one alone. On the loser side of the board, Western Digital, some sell-side checks are talking about a server build push out that weighed on Western Digital, down 5.75%. FRC, their EPS miss, and that stock lower by 4.5%. NRG and APA down with energy, and I didn't see any real news to Centel, down 3.71%. Turning our attention now to earnings. Yesterday's surprises, Goldman beat by over $1, had a positive reaction in the stock. We haven't been seeing positive reactions from the large cap banks following their earnings. Citigroup, JP Morgan, not so much. Wells Fargo traded lower despite a 14-cent beat yesterday. What's weighing on the banks is their net interest margins. With rates lower, it's harder for them to make money in their day-to-day operations of, taking deposits and making loans. Interactive Brokers missed by 5 cents. Cintas beat by 13 cents. Johnny John beat by 16 cents, but the regulatory risks there are prevalent at this time. Reporting today, before the open, Bank of America reported stock not doing much. Abbott, PGR, and Textron, other bullish names to pay attention to. eBay and IBM are bullish stocks after the close tonight. Neutral stocks, more banks. BK, CMB. After the close, CCI, KMI, and URI all neutrally rated. And then after the close, Netflix and SL Green have bearish rating. Chaikin suggests caution when holding bearish stocks ahead of earnings. So let's dive in. Let's look at the charts now. On Wednesdays, we take a look at sentiment. And sentiment is more greedy than fearful. We measure this in a couple of different ways. I like to look at the VIX as a measure of sentiment. I look at the CNN Fear Greed Index. But a great way to see what investors are doing, not what they're saying, but what they're doing, is to look at the equity put call ratio. And I'm looking at a 13-period moving average of that put call ratio because the individual day-to-day data tends to get very choppy. So what we can see here is puts are no longer elevated relative to calls as they were back at the end of May, early June, right? And we are actually getting close to levels that have marked near-term tops in the market. Now, is this a top call? Absolutely not. But it's something to keep in mind as you're looking for ideas and deciding how aggressive you want to be in the marketplace. If you look through the charts and Chaikin Analytics on a near-term basis, all of the major markets in the U.S. are overbought. SPY is overbought, the Qs are overbought, IWM is overbought, diamonds are overbought. Add to that the fact that sentiment has become much more bullish than bearish of late. Look at what happened here at the end of last year. Big spike in bearish sentiment, coinciding with a low in the market. Back in, we had the May sell-off, and at the end of May, early June, big spike in bearish sentiment, coinciding with a low in the market. Now we've worked that off. And as I said, you can see these levels here, down here around 0.57 have coincided with near-term tops in the market. So just something to keep in mind as you're throttling your level of aggression here in the marketplace. Oil and gas services remains a group to avoid. XES is the ETF that we use to track that, and it's pretty clear that it is in a downtrend below a steadily declining 200-day moving average. And what jumps out at me is over the course of the past 12 months, the RSI has not become overbought and routinely becomes oversold. That is a momentum confirmation of weakness. Or said another way, it's telling you that that downtrend is strong. Now, we've had a bit of a counter trend rally that's beginning to roll over. And on a relative basis, XES is in a steady downtrend against the S&P 500. So energy is a weak sector. This is a weak industry group within that sector. So it remains a group to avoid if you're trading to the long side or investing to the long side. If you do like to trade to the bearish side, you can consider a name like Helmerich & Payne. Helmerich & Payne is a very bearish stock, weak trend, weak industry group, underperforming the market, overbought with bearish money flow, and triggered one of our sell signals here today. If you do trade to the bearish side, Helmerich & Payne is the type of name that you want to consider taking a position. That's going to wrap it for today. Get daily stock ideas for free. Head over to chaikinanalytics.com/today. Within that email, stock ideas to consider. And a lot of the content for this show is pulled out of that email. So you'll be able to follow along closely with what I'm saying here. Have a great day, everyone.